Bitcoin ETFs just pulled in $244 million in a single day. And that's day 3 of a streak that's now topped $626 million. By the end of this video, you'll know why this 3-day pattern is different from every other inflow we've seen this year, and what the smart money is positioning for that retail investors are completely missing right now. Here's what's happening. Institutional investors are flooding back into Bitcoin ETFs after weeks of hesitation. BlackRock's IBIT led the charge with $93 million on the last day alone. Fidelity's FBTC added another $65 million. But here's the detail almost everyone's glossing over. I'll come back to it in a moment, because it changes everything about what this really means. First, let's talk about why this matters right now. We're not just seeing random buying. This is the 3rd consecutive day of inflows, which breaks a pattern we've been stuck in since January. For context, Bitcoin ETFs have been bleeding money or staying flat for most of this year. Institutions got spooked. Retail got bored. The excitement from the TF launch faded fast. But something shifted this week. The timing here is critical. We're watching two massive forces collide at the exact same moment. On one side, you've got Bitcoin consolidating right below major resistance levels. Traders are watching 68,000 like hawks. Clean break above that, and we're talking about a potential run to all-time highs. On the other side, and this is where it gets interesting, there's a regulatory deadline looming that nobody's connecting to these inflows yet. The E-Nate Banking Committee is weeks away from voting on crypto clarity legislation. This isn't just another bill that dies in committee. Major financial institutions have been waiting on the sidelines specifically because they need regulatory certainty before they go all in. They're not gambling with billions on maybe. Now here's that detail I mentioned earlier, the one that changes everything. Look at who's buying. It's not retail FOMO driving this. It's not crypto natives aping in. This is institutional money, the kind that moves slowly, does months of due diligence, and only acts when the risk-reward is crystal clear. These are pension funds, wealth managers, family offices. They don't chase pumps. They position ahead of structural shifts. Indeed, there's a structural shift happening right now that ties directly into the IO 20022 banking transformation. Here's why that matters. IO 20022 is the new global standard for financial messaging. Banks worldwide are upgrading their systems to handle real-time settlements and cross-border payments. Bitcoin, whether traditional banks like it or not, is becoming part of that conversation. Not as a replacement for the dollar, but as a settlement layer institutions can actually use when they need to move value across borders fast. The TFs are the bridge. They let traditional finance touch Bitcoin without actually holding Bitcoin. Indeed, as regulatory clarity improves, which is exactly what's happening behind closed doors right now, more institutions get the green light to allocate. That's $626 million over 3 days. That's not panic buying. That's positioning. Smart money doesn't wait for certainty to hit CNBC headlines. They move when the probability shifts in their favor, but before the crowd notices. Well, what should you actually watch next? 3 things. First, watch if this inflow streak hits 5 consecutive days. That would signal conviction, not just a short-term bounce. Second, track Bitcoin's price action at 68,000. If it breaks and holds above that level with increasing volume, institutions will pile in harder. Third, and this is the big one, watch for any E-Nate Banking Committee announcements in the next 2 to 3 weeks. Positive signal there could trigger the next major leg up. Here's the bottom line. Institutional money is moving back into Bitcoin ETFs at a pace we haven't seen in months, and it's happening right as regulatory winds shift and technical setups align. This isn't about hoping for a moonshot. This is about understanding what the smart money sees that most people don't. If you want to explore trading opportunities around Bitcoin or other major tokens as this plays out, you can check out BitUnix using the link in the description. Just remember, this is educational content only, not financial advice. Always do your own research before investing. The crypto market is volatile, and you should never risk more than you can afford to lose. Follow Stack Daily 60 for daily crypto and money tips.